I think it's epic that retail investors are winning here. It's kind of funny because I feel like Tesla was the original short squeeze that proved it wrong to Wall Street, where no one on Wall Street got it, and it was the retail investors. But like that to me was a little different because we were crowdsourcing research on this amazing company versus just buying a company to force a short squeeze. I think there's a lot of interesting dynamics here. Like if you go onto Wall Street and read about what they're doing, there's a lot of, fake it's like the amount of theories out there about what's happening is insane. Like, I think there's no question GameStop is way overvalued. So it's like if you're buying or selling, remember, I'm not a financial advisor. I don't, but if you're buying GameStop at this price, it's like worth 10 or 20 billion for this failing business. Like, is that really sustainable? But then people are like, don't sell, just hodl. So that keeps forcing this increased irrationality, which is just insane. And so what I think is happening, there's a lot of theories about hedge funds essentially starting to sell stock or sell like little blocks of stock and hit the bid to try and push the stock down a little bit and then have people panic and think that the game's over and that everybody should sell, and then it goes in a downward spiral. And so that's the thing that I think a lot of people on Reddit at least are talking about, is like, watch out for this fake, bear trap. And so I don't know. I think this is insane because on one hand, the higher this goes, the stronger the retail investors get. We already took down Melvin. You already took down Citron. Now we're getting Citadel involved. But it's like the bigger that GameStop gets, the more irrational this valuation gets, the bigger the incentive for bigger and bigger hedge funds to short it. So once GameStop's a $30 billion company for no reason, then you get even bigger people than Citadel who are like, I kind of want to short this thing because it really makes no sense. And so that almost adds to the market dynamic. So I think this is insane. And almost, I think this is like the public markets breaking in some way of, I don't know. I just think the mania of the public markets is like, is the stock up or down? We've gotten so far from what is the company we're buying. There's a company behind every stock. How many people, who are buying GameStop stock actually go to the stores and think it's dope and still has a dope future? Probably not that many, which I think is kind of sad. So I do think this is a lesson that the public markets, I think this is almost an L for the entire public markets because it's such a shit show. And it shows that like stocks shouldn't trade every day, that we shouldn't just be looking at this price every day. Like this is a casino. This is gambling. This isn't betting on great companies that are changing the world. And so that's the part of this that I'm not a big fan of, frankly. And like, I'm all about investing in the companies you believe in. Like invest in a product you think is dope that you want to see spread. Like, do you really want more GameStop stores to open? Like, and so, but on the flip side, I think it's awesome to stick it to the hedge funds because to me, it's like Wall Street bets just stoop to the low, essentially of the typical hedge funds of Wall Street firms, except they're not using CNBC to tout their bullshit. They're using, Reddit and Twitter. So the power of social media, which we all know has been booming, has finally reached this inflection point where it got big enough to actually savagely overtake the CNBC media. And I think CNBC, I don't know, I can't believe anybody watches CNBC still. It honestly blows my mind. I don't think that many people actually are.